You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Tuesday, 18th day of February, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here or right now. We do 2 live broadcasts every trading day. The first live broadcast, that's our live training room. So that one is private, members only, and those who are taking their 1-week free trial. If you have not taken your 1-week free trial, when Michael joins us in a bit, he'll walk you through step by step everything you need to do. It's a piece of cake. We'll get your indicators up and running today, and then you'll get 5 consecutive trading days on the trial. Even though we had a holiday yesterday, and I hope you had a nice President's Day. They're trying to change the name of it now because, well, not all presidents were good presidents, so they say. We'll see what happens. But anyway, I hope you had a happy, a nice, long weekend. Whatever you did with it. So, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break. Come back for this broadcast, the afternoon broadcast, which unlike the first broadcast, this one's open to the public. Everybody, everywhere, on planet Earth with an internet-connected device. Now, there's 2 different ways to join this afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com. Scroll down to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before this broadcast starts. In that email, there's a link. So at 12 noon Eastern, just click the link in the email, and it'll log you right into our platform. And the benefit of doing it that way is you have access to the question box so you can ask questions and participate in the discussion. Of course, there will be days when you're out of the office, away from the desktop, but you still want to join live. And some days you'll just be busy, can't join live, but want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. You already got the YouTube part memorized, so all you got to remember is CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there's over 2,700 daily episodes archived for your educational and viewing pleasure. youtube.com/CFRN. This is our schedule for each afternoon broadcast, so we're going to dive right into our daily devotional. We're still on the topic we were on last week, overcoming fear, worry, and anxiety. Something that probably everybody in the audience is dealing with probably right now. It's just a part of the human condition. Today's scripture 1 John 4:13 through 19. I'm going to share it from the Message translation. Starting in verse 13. This is how we know we're living steadily and deeply in Him and He in us. He's given us life, from His very own Spirit. Also, we've seen for ourselves and continue to state openly that the Father sent His Son as a Savior of the world. Everyone who confesses that Jesus is God's Son participates continuously in an intimate relationship with God. We know it so well. We've embraced it, heart and soul, this love that comes from God. God is love. When we take up permanent residence in a life of love, we live in God and God lives in us. This way, love has the run of the house, becomes at home and mature in us, so that we're free of worry on Judgment Day. Our standing in the world is identical with Christ. There's no room in love for fear. Well-formed love banishes fear. Since fear is crippling, a fearful life, fear of death, fear of judgment, is one not yet fully formed in love. We, though, are going to love and be loved. First we were loved, now we love. He loved us first. Again, that was 1 John 4, verses 13 through 19. So, to take a line from a Beatles song, today we talk about all you need is love. When you think about fear, you might suppose that the opposite of fear is confidence or peace. You might think that what you need is better self-esteem. But the Bible says something quite different. It teaches us that what we need isn't more self-love, but rather more love for others. That's because the opposite of fear isn't confidence or peace. The opposite of fear is love. The only way for us to overcome our fears is to learn to love more than we fear. And that's because the only power strong enough to eliminate fear is love. Love for God and others. Let's look closely at John's advice about overcoming fear and try to see how it works to slay this mighty dragon. We just read the whole passage, exactly how to do it. The kind of love John refers to here isn't merely the love that's common to most people. This powerful love comes from only one source, God. Although all good gifts come from God by His common grace, including the love that unbelievers have for one another, the kind of love John is talking about here is a love that is experienced only in a personal relationship with God. It's as we're drawn to Him and we enter into fellowship with Him that we experience the powerful, fear-defeating love that is His alone. We can see the differences between a relationship based on fear and one based on love by considering the difference between being judged by a stranger and judged by a father. In this way, we'll be better able to understand how love can cast out fear. So what responsibilities are you neglecting because of fear? How would love overcome those fears? What steps do you need to take to overcome evil with good? Be specific here about the task you need to do. Let's pray. Heavenly Father, thank you for filling our hearts with your perfect love. Through your Spirit, we know that we abide in you and you in us. Help us to walk in the confidence of your love, casting out all fear, for perfect love drives out fear. Teach us to love one another as you have loved us. For we love because you first loved us. May our lives reflect your grace and truth every day. It's in Jesus' name we believe and pray, and everybody said, Amen. Amen. And happy Tuesday. All right, let me give you the numbers from around the world. We'll start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow down. Let's make sure we got the freshest of data. Looks like the Dow's down about 77 points. The NASDAQ is down 17. S&P 500 up 2.5. Make that 3. And the Russell 2000 up 8. Pretty quiet, narrow day. In the commodity basket, crude oil, on the other hand, is up 96 cents, trading 71.70 last. That's a gain of almost 1.5%, or $960 per contract traded. Gold up $48.60, trading $29.49.30 last. That's a gain of almost 1.75%. Silver up 53 cents, trading $33.39 last. That's also a gain of almost 1.75%. And the Asian markets at the close. The Nikkei posted a gain of 96 points. The Shanghai dropped 31. The Hang Seng gained 360. And for the Hang Seng, that is just over 1.5%. And in the European markets at the close, FTSE down just over 1 point. The DAX up 46. The CAC up 17. So that gave us a mixed day in Asia. It's a mixed day in the UK. And it's a mixed Radio Tuesday here in the US of A. And pretty quiet. Now let's look at the news. Now this one, everybody keeps saying, well, it's just a coincidence, it's just a coincidence. And maybe it is. But can you remember, over the course of your life, so many airplane tragedies in such a short period of time? Sometimes it's almost like we can't go more than a day without hearing of another one. What conspiracy am I trying to theorize here? None. Just It's so hard to believe it's all coincidence. A Delta Airlines plane, operated by its subsidiary, Endeavour Air, crashed and overturned upon landing at Toronto Pearson International Airport yesterday. All 76 passengers and 4 crew members aboard the flight were evacuated, and at least 18 people sustained non-life-threatening injuries. Authorities led by the Transportation Safety Board of Canada are still investigating the cause of the incident. The aircraft was flying in from Minneapolis, and heavy winds with gusts of up to 40 miles per hour reported at the time of the crash. The temperature was around 18 degrees Fahrenheit. The Bombardier CRJ 900 aircraft is about 16 years old and can often operate for 2 or 3 decades with regular maintenance. Yesterday's crash adds to a spate of aviation accidents around the world in the last few months, including when 179 people died in December after an airliner crashed on landing at a South Korean airport, and when 67 people died last month after a U.S. Army helicopter and an American Airlines regional jet collided in Washington, D.C. And that's just 2 of, I don't know, I'm thinking there's been 10 if you count the bumps and near misses. Now, of course, I turned on the news yesterday and, oh, it's Trump's fault. He's messing with the FAA. And this happened in Canada. It's not even the FAA's jurisdiction. But this plane was coming in for a landing and it flipped over. Now, of course, they gave scientific reasons why, with the crosswinds and whatever. I don't know. I pray that's all it is. Just coincidence. Pope Francis will remain in a Rome hospital longer than expected due to a complex clinical picture from a respiratory tract infection. The 88-year-old pontiff was admitted Friday after a week-long bout of bronchitis, marking his 4th hospitalization since his appointment in 2013. Tests revealed a respiratory tract infection, and this is polymicrobial, so multiple pathogens are involved, requiring treatment and adjustments. The Vatican says he remains stable, but has not given a release timeline. Before his hospitalization, the Pope maintained a busy schedule, including overseeing the commencement of the 2025 Jubilee. The Argentine-born Pope battled a severe respiratory infection in his youth, leading to a partial lung removal. He spent 10 days in the hospital in July of 2021 after colon surgery, was hospitalized for 3 nights in March of 2023 for bronchitis, and underwent hernia surgery in June of 2023. Officials say doctors are closely monitoring his treatment response and watching for signs of worsening, particularly pneumonia. So, Lord, in our prayers today, we certainly include the Pope, Pope Francis. We hope that he'll be better soon. I'm sure most of you know how they elect a new Pope. They stand outside, and people stand outside and they watch this smokestack. And if it comes out black smoke or white smoke, I forget which, it means that those doing the voting have arrived at a decision. I think that's how it goes. I wasn't raised Catholic, but it seems like I remember that. To the markets. U.S. stocks were largely muted today to begin a holiday-shortened week of trading with potential policy moves by the Federal Reserve and President Trump in focus. Stocks on Wall Street are cautiously upbeat after Monday's closure for President's Day as investors debate the future path of interest rates. Fed officials over the long weekend signaled a firm belief that rates should stay at current levels to combat rising inflation. Treasury yields stepped higher as investors sought more clues to the chance of rate cuts this year. Given recent data failed to give a clear steer, the benchmark 10-year yield rose to trade around 4.51% to shed its lowest closing level in a week. That uncertainty has turned the spotlight on Wednesday's, that's tomorrow's, release of the minutes from the Fed's January meeting, where hopefully there will be more clues for the policymakers regarding how they're thinking and how that coincides with Trump's tariffs. At the same time, the U.S.-Russia talks on ending the Ukraine war are gripping markets after Trump and Putin's teams met in Saudi Arabia yesterday. Stock markets in Europe held near record highs as traders bet on higher defense spending in the region. Sadly, war is good for the markets. Earnings season continues with results from 46 S&P 500 companies due this week. Baidu report of a fail in revenue kicked off looming results from China's trillion-dollar tech industry, including Alibaba, on Thursday. Home builders are feeling less optimistic about the housing market as they navigate concerns over tariffs, elevated mortgage rates, and high housing costs. The National Association of Home Builders Wells Fargo Housing Market Index was 42 in February, a 5-point drop from January and the lowest level in 5 months. Economists were expecting a reading of 46 per Bloomberg data. A reading under 50 indicates that more builders view conditions as poor opposed to good. While builders hold out hope for pro-development policies, particularly for regulatory reform, policy uncertainty and cost factors created a reset for 2025 expectations in the most recent HMI. One of the major cost concerns stems from President Trump's executive order imposing 25% tariffs on all imported steel and aluminum products set to take effect in March. According to the National Association of Home Builders, this could raise residential construction costs. This tariff move comes after Trump announced a 1-month pause on other tariffs for Canadian and Mexican goods. The European Central Bank extended its work-from-home policy by 2 years on Tuesday, only requiring staff to be in the office for about 50% of their time. Now, this is happening against a backdrop of a lot of notable entities reversing their remote work policies. The ECB, the world's second largest central bank, will continue to allow staff to work 110 days remotely, or roughly half of their working time. And employees do not have to be in Frankfurt during their time away, the bank said. That must be a great job if you can get it, I guess. JP Morgan Chase last month asked employees to return to the office 5 days a week starting in March, while President Trump has ordered federal workers back to the office now. Amazon and others asked staff to return to the office late last year. The ECB said that 95% of its employees took advantage of its teleworking policy and spent 55 days on average away from the office, which was not detrimental to connections within or outside the bank. A survey of staff showed that 80% see no impact on how their managers perceive their work, and 88% report positive effects on their work-life balance from the arrangement. Yeah, okay. So a survey of staff, they're happy. Why? They get to stay home. Wow. Did anybody tell them COVID's over? You know, here in the U.S., we're paying such an incredible sum of money on leases, on buildings and offices where nobody's home. I mean, is that waste, fraud, and abuse? Yeah. And if you're honest with yourself, you know that your work performance is going to be better in the office where you're held accountable, where somebody's watching, than when you're left to just do your own thing. It's as if this bureaucratic regime is some kind of royalty. I mean, I think they bleed red just like the rest of us. New York Governor Kathy Hochul is raising serious questions about the future of Eric Adams' administration, citing her power to remove the mayor as she calls for meetings at her Manhattan office with key leaders today to discuss a path forward. The crisis surrounding Adams intensified after 4 top deputies said they were resigning, and the Speaker of the City Council called for him to step down. Hochul, a fellow Democrat, called allegations of a quid pro quo between the mayor and the Trump administration extremely concerning and serious. Well, all the guy wants is for the citizens that he's responsible for to be safe. Hochul said in a statement, "I recognize the immense responsibility I hold as governor and the constitutional powers granted to this office." This was in a statement last night, adding that they have never been used to remove an elected mayor in the state's 235-year history. Overturning the will of the voters is a serious step that should not be taken lightly. Yeah, that's exactly what she's doing. You know, New Yorkers, ask any New Yorker, do they want law and order? Do they want to be safe? And she is, with this order, overturning the will of the voters. And she's right, it should not be taken lightly. That said, the alleged conduct at City Hall that has been reported over the past 2 weeks is troubling and cannot be ignored. And of course, all the big names like Reverend Al Sharpton are coming out to scream and yell and do the unhappy dance. And last from Bloomberg, Qatar will invest $10 billion in India, as well as have its sovereign fund open an office in the South Asian nation, as the 2 countries seek to deepen bilateral ties. The Middle East nation has agreed to invest the funds, and the Qatar Investment Authority will open an office in India, according to the statement issued after the bilateral meeting. The Indian government and the state of Qatar signed several agreements related to bilateral strategic partnership and a revised double taxation avoidance agreement. The nations also agreed to expedite negotiations on the India-Qatar bilateral investment treaty. That was in the statement as well. So, maybe that's why the markets are just so quiet today. All right, bring it home. Logic 247. Wow. Now, Valerie posted this recap last night. I guess there was nothing to add this morning, or I didn't get the memo, so All I have is what she posted last night at 10 p.m. 8 alerts issued, 1 actionable, 100% stopped out. This comes on the heel of a week last week where we had a total of 5% stopped out. So here we sit on a Tuesday. I'm sure there'll be some changes here. Could be more stop outs. I haven't gone through and checked them all. But she will this afternoon. She'll update it, as she always does. Over the last 342 weeks, we have now issued over 19,000 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out, again based on market structure and a very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. Oh, I think I remember now, Valerie told me she had to be out today. I think she's attending a funeral. So our prayers are with her and her family. So we don't sweep anything under the carpet. Friday, when she wrapped it up for the week, 5%, that sure looked good. Today's Tuesday, and we got 1 stop out. Now the logic alerts, each one has an entry price, an initial target designed to help you get your goal for the day, then additional targets, and then a final trade to target. Yeah, you can trade them, but the real purpose is to help you learn how to read a chart. You want to get to the point, if you're going to trade for a living, you want to be able to look at any chart, any time frame, any market, and with the use of our humble indicators, instinctively know what the next high probability move is. You should be able to look at a chart and see where the next major resistance is relative to whatever time frame you're looking at, where the next logical low is, because in between that high and that low lives what we call windows of opportunity. That's where you want to be. You're not dependent upon man or machine. You just simply need a chart with data flowing. Make sure you use the Logic 247 alerts as intended, okay? Now, the Logic alerts can come out anytime around the clock. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. Our original alert service, the concierge trade alerts, those go way back, a lot farther than 342 weeks, probably twice that long. They're different. They don't come out around the clock like the Logic alerts. They're posted as a static report shortly before or after the Globex Open. So the Tuesday session started last night at 6 p.m. Eastern. Now on the days that I can, I try to get them out 5 minutes ahead of the open. Last night it was 10 minutes after the open. Okay. If you're a member or trial member, be sure to read this information. Make sure you understand it. If you don't, ask, get you an answer. So 10 minutes after the open last night, all of our members and trial members had all of these targets: the S&P, the Dow, the Russell, crude oil, the NQ, gold, and silver. So let's go take a look at today's charts. All right, here's the daily. Now, We've got a bearish engulfing candle here. What does that mean? Well, that means today's high is higher than yesterday's high, and today's low is lower than yesterday's low. Now you say, but wait, yesterday was a holiday. Well, yes, here in the US, but in the rest of the world, they don't celebrate American President's Day. So, not a lot going on, but the markets were open. So yesterday was actually, it looks like an inside day. 46.75, 47.25. Nope, we had a slightly higher high, like a 1 point higher high. And so today we've got a high at, now remember this all started last night at 6 p.m. Eastern. Today's high 61.57.75 and the low 27.5. So that's about 30 points from the low of the day to the high of the day. Below us, we got the perfect stack. We got price, step line, blue and climbing, the daily BBC. Now, I've been waiting to see if price would pull back, and it could. We could see this price pull back to the top of this trend line, and by the time it takes that to happen, the BBC could be aligned. Now, the green line's called the BBC, just stands for bull bear cross. When price crosses below it, we're bearish and expect lower prices. Price crosses above it, we're bullish and expect higher prices. Lower prices, higher prices. You get the idea. Now, this is what ordinary market conditions look like, normal market conditions. This has been a bit messy, okay? Now, institutional traders look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It has everything to do with account size. Institutions, they have accounts in the hundreds of millions, billions, even trillions of dollars. And so they can stay in a profitable position longer than you and I might be comfortable with. And they can handle a drawdown a lot deeper than you or I could withstand. Also, they can hold positions for multiple days, not concerned that the margin rates skyrocket if you hold a position from one day to the next. Right now, we're this high 57.75, and then the next high 62.25. We need to take out this high, and then we'll get up into this area, and then there's the all-time historic high. I encourage you to spend 2 minutes with the daily chart of whatever you're getting ready to trade. Number one, you get a free look over the shoulder of the deep pockets that move price, and you're able to identify major areas of support and resistance. If you're on your smaller time frame, your trigger chart where you actually execute your trades, you'd have no way of knowing how important 62.25 is if the market starts to rally. I mean, 57.75, 62.25. So it was about 4 or 5 points we missed hitting that, but we're coming back into support, multi-layered support, and the larger the time frame, the more important the information. Okay, so I mean, you don't have to spend all day staring at the daily chart, but have a glance, whether it's stocks, futures, crypto, Forex, ETFs. Price flow is the same across all markets and all time frames. But again, you're getting a look over the shoulder of the deep pockets that move price, and you're identifying major areas of resistance and support that you will not see on your smaller time frames. Now the BBC is fractal in nature, just like the markets. You could put it on a daily chart, a weekly chart, a monthly chart. You could put it on a 30-minute chart, a 5-minute chart, a tick chart, a range chart. And you're going to get the same results. Above the BBC, expect higher prices. Below the BBC, expect lower prices. But remember, it's always relative to whatever time frame you're applying it to. In other words, you don't get daily results from a 1-minute chart or vice versa. So, here's the flat ES. Now the vertical lines separate today, Tuesday. Here's Monday. The markets closed yesterday at 12:30 in honor of the holiday. But this is what the rest of the world looks like without the U.S. There's a little bit of difference, but not a whole lot. And then back over here is Friday. Now these are last week's weekly trading zones. The weekly trading zones come out typically Monday morning at 6:15 a.m. Eastern. But when Monday's a holiday, they come out Tuesday morning at 6:15 a.m. Eastern. So all the targets issued last night were based on last week's zones because this week's zones had not come out yet. Okay? So tomorrow on the broadcast, you'll see this week's zones because any alerts that go out today will be based on this week's weekly trading zones. And so this was the opening candle last night, and it came right down to the short target. Now, it was 10 minutes into the life of this candle, okay? These are 30-minute candles, 10 minutes into the life of this candle that these targets were published, the ones I just showed you. These guys. Okay. So we hit the short target support. You'll see that low lines right up with that low from Monday morning, about 10 o'clock. So we hit the short target. Now, if you traded that, you got your goal. You're done for the day. Support will always send the market looking for resistance. Price also always reverts to the mean. In our case, the mean is green. It's called the BBC, bull, bear, cross. Okay. Now the pullback to the BBC holds more often than it doesn't, whether it's pulling down from above or pulling up from below. The pullback holds more often than not. That's important to keep in mind. So as we approached, you see these highs right here. Yesterday, they didn't quite touch the weekly zone at 61.48. Now that wasn't the highest weekly zone. The highest weekly zone was way up there. I didn't think we'd reach it, but we didn't. This was a sticking point for much of the week. Last week, yeah. So we punched through the weekly zone and we hit the target. Resistance. Resistance will always send the market looking for support. The pullback to the BBC holds more often than not. Support sends us to resistance. Resistance sends us looking for support. Prior to the Wall Street Open, typically the Wall Street Open will be the largest candle of the session. Not today. Okay, this was the 9 o'clock candle. Put us below the zone and below the BBC. And the perfect stack, price, step line, red and falling. So we made it to the target. We overshot the target. Now this is Tuesday, Monday, Friday. This low from Friday became basically this low from today. There we go. Yeah. Support will send us looking for resistance, which we found at red and falling. This was a red candle all the way to the top. It came within just a few ticks of hitting the BBC, but because there wasn't any buying pressure to back it up, it didn't quite touch it. That's a sign of weakness. However, we come back down to the short target again, and now the black step line is crossing red and falling. When the step line crosses red and falling, we anticipate a retracement back to the BBC. When the black step line crosses blue, see how over here you got the step line on the left side of blue and climbing? But once it crosses to the right side, that's when we anticipate a retracement to the BBC. Pretty reliable. Does it happen every time? No. Does anything happen every time? Very few. If you're looking for that 100% holy grail, never get stopped out again thing, yeah, it doesn't exist. It can't exist. It would defy the laws of science, physics, even God. So the step line's crossing. So we would anticipate at least an attempt to get back to the BBC. But the market is so lethargic. Now, this may be in part due to the fact that the Fed minutes come out tomorrow. We'll see. But we managed to nail the short target and the long target, and then again the short target. So that was good. Here's where the Dow opened last night, and it took it a little longer to get to the short target. Support based off this low from yesterday. That's market structure. Support sends us looking for resistance. Now if we look left, was high 753. What was this high? 745. So 8 ticks. Got an 8 tick higher high. And for the Dow, it takes 20 ticks to get your point. So that's a sign of weakness, okay? Down we go. We hit the short target again, okay? And then we find support. We spiked the low from yesterday, but not by much. When this candle opened, it continued lower, then it reversed, and we put in a lower high. Okay, so you got a high, you got a lower high, and then we get below the BBC, and we travel down to the weekly zone at 44,560/65. Support sends us to resistance at the BBC. Resistance sends us looking for support, which we found at the zone. Now again, this is a zone that was published a week ago yesterday. Important prices, important areas are almost always tested. Now as you can see, the step line has crossed red and falling. So what's price trying to do? Retrace to the BBC. Pullback holds more often than not. So if it holds, look for another leg to the downside. If it doesn't hold, if it trades through the BBC, be very careful right here, because you've got a bearish cross where the red line gets below the green line. When you have a bearish cross that leads to an extended move, the first time price revisits that area will almost always be good resistance. The opposite's true of the bullish cross. Okay. So, step line is crossed. Look for a move up to the BBC. And just doesn't look like there's a whole lot of buying interest. There's some, enough. It looks like it's going to push us up there. But we'll probably get hung up in this area and get another leg to the downside unless something changes. Alright, the Russell. Here's the open last night. We just consolidated alongside the BBC, and it wasn't until early morning we had liftoff. We hit the weekly zone pretty much to the tip. Resistance sends us back to support at the BBC. Even though we spiked it, the candles are physically touching. And as long as the candles are physically touching, that means the pullback held. And that sent us up through the zone. And what did we put in a high at? 2302.40. So yeah, we missed the long target by about 6 ticks. Now you can see that the high of this candle is basically this area right here. So that sent us back to the zone and blue and climbing, and we've just been consolidating sideways for an hour and a half. NQ. Here's where we opened, and we dropped. We didn't drop all the way to the short target, but we dropped enough for you to get your goal for the day. Remember, the targets came out 10 minutes after the open, and this was the opening candle. Okay. Buyers came in, drove us up, got us through the BBC, red and falling, turned to blue and climbing. We get to the long target where we just consolidate for a few hours. And then it looks like we're going somewhere until we don't. Look left, you'll see why. Resistance sends us back to support, back to resistance, and then there's that 9 o'clock big move, and here's the 9:30 opening candle, which took us all the way down to the short target. And we've just been doing some wide-ranging consolidation here at the short target. Notice the step line has crossed red and falling, so look for price to make its move back to the BBC. Crude, we are on the J contract now. This was the open last night. We ran up and we ran down. Ultimately, we pulled back to the BBC. Found support. So that gave us another leg and a retracement. A leg and a retracement. Pullback held. That sent us all the way up to the target, through the target, the zone overhead. We spiked that zone. Go look left. And then we come back down, this time with red and falling, and we slice right through that zone. Now, only 3 things happen when price hits a zone. 70% of the times consolidation, 20% of the time rejection, 10% of the time the slice. So we sliced through the zone, and when it ran out of steam, it retraced back to the zone it sliced through and continued in the direction of the slice. Now you got a bullish cross down here. If price gets back into this area, expect support the first time down. Hang on a second, Michael's having trouble getting logged in. Alright, Michael's having some issues with GoTo. I had issues with it this morning, and he's now having the same issues. Alright, gold. Here's where we open. We drop to the zone. Support. Took us right up to the long target. And we got above the target after we consolidated at the zone. Leg, retracement. And then a big leg that took us, didn't make it quite to that bearish cross. Okay, guys, we'll pick up with silver when I come back. Michael's going to give us... yeah, I've had that issue, Michael, a couple times of late. That exact same, that picture you sent me.
Yeah, that's the first time it's happened to me. But a new browser fixed it. So, I mean, refreshing didn't do it. But it's okay. We're in. We're in. I'm ready to go. If you're ready.
I'm ready. Yep.
Okay. Here we go. Bring it over here and here. And there. All right.
Okay. Looks good.
All right, here we go. Good afternoon, everyone. Today is Tuesday, the 18th day of February, 2025. Now, if you have not taken a free trial with us and you want to, go here to mytradingq.com, click on the purple button right here. There is no credit card required for the trial. Click on that purple button. When you click that, you will be sent to this registration page, right? No, this registration page. On this page, all that we ask for is your name, your email, and your phone number. Down here, there's 5 multiple choice questions. Fill those out, please, honestly. And down here at the bottom, if you have a NinjaTrader and you want to use Ninja charts, mind you, we don't have all the indicators on Ninja charts, but if you want to use Ninja charts, what we do have, the old school stuff, then give us your machine ID. If you just want to trade on Ninja, that's fine. We don't need the machine ID for that. You do need to give us your TradingView login ID, though. If you want to use our charts, what we're using right now, this stuff that you see right here, the old school stuff, you'll have the YVR. But the new stuff down here, you will not have unless you take TradingView. All right, you got to get TradingView charts. And if you don't have TradingView charts, go here to mytradingq.com, click on Trading Platforms. And it's right down here. Follow these instructions right here for the TradingView charts, okay? Click on that, follow those instructions, and give us your TradingView login ID. All right. All right. So this morning we're back and forth quite a bit. We almost got up to what I was looking to get to. I think at one point we probably were, but then I had 3 stop outs in a row on the NQ. On the NQ, stop outs are pretty big, and I had 3 in a row on there. I missed some good trades, but I got 3 in a row, 3 bad ones in a row. So we ended up with just 682.50 per contract on the morning session. We ended up with 82 ticks on the NQ, 10 ticks on the Russell, 31 ticks on gold, and we lost 7 ticks on the ES. Put us at 682.5 on the morning session. Today it took 5 minutes and 1 trade, just like Friday, to get to $1,000 a contract. And we took a total of 39 trades. So on the month now we're at $9,937.50 with 1 contract, averaging $1,104 per contract per 2-hour trading day. Down here at the bottom, we are up to $42,115 with 1 contract over 29 trading days, averaging $1,452 per contract per 2-hour trading day. Now, this month is going to be a little bit off because we had a couple of missed days. We're only going to have 17 trading days this month, I believe, right? So far this month we're at 9, and we only have 1, 2, 3, 4, 5, 6, 7, 8. And we're going to have 17 trading days this month. So this will be our lowest trading day month of the year, I think. Actually, no, I'm going to take a week off next month. So next month, let's see what's going to happen next month. Let's see, next month, 5, 10, 15, 16. Yeah, so even if I do take a week off next month, it'll be just 1 day less. But so far this year, I'm going to have 17 trading days. Anyway, on the year now, we're averaging $1,452 per contract per 2-hour trading day. And if you were to quit trading when you get your goal for the day and you were to add 1 contract per month, you'd be trading 2 contracts right now. And you would have gone from $0 to $6,365 in profit, right? Averaging $1,321 per hour for hours traded. You would have only had to work 4.81 hours so far this year. That is pretty good stuff. And getting in early, getting those trades in early at 9:27, like I like to do, you can see it does make a difference if you get in there right early. Those trades come up and you're able to get in there, put those trades on, get your goal for the day right away, and then you can go do stuff you want to do. I mean, I love trading, so it is what I want to do, but you may have other things you have to do. So do all that. And now let's go look at the trades we did take. All right, today we'll start out with gold. Gold was we didn't have the least amount of trades for Russell. We only had one trade, one 10-tick trade on the Russell, but these were our trades here on gold. The green lines are missed trades, and this was our first trade right here on gold. We picked up 10 ticks on our very first gold trade, 10 ticks on our next trade, and 5 ticks on the trade after that. And then we went from 10 to 20 to 25 to 31. That was the very last trade we took right there. We had 6 ticks and went to 31 on that trade. I guess it wasn't that trade. It looks like I'm missing one. 1, 2, 3, 4, 5, 6. This is where we went to 31. 1, 2, 3, 4, 5. Yeah, 5. Okay, 5 actually moved price, and 6. 1 did not. Okay, and then during the break, let's see, there was one trade right here. You had a separation right there, divergence trade, and you can see that went at least 8 ticks into profit and went more on the next bar. And you had another one right here. That one didn't get marked because it's a divergence trade, but that was a nice trade right there too. Would have given you some profit. And you have another one triggering right now that will be giving you some profit. You see these numbers that I have showing up here. Those are numbers based upon a different trade setup, but the divergence trade setups, they overlap on a lot of them. So you get the numbers on a lot of divergence trades automatically. So there's one going on right now as well. The entry on that one should have been right here at 49.4. It's already gone too far into profit to get into it. If you didn't get into it, it's already gone up here to 49.9. So 5 ticks is what you expect out of the trade, and it's already done those 5 ticks. Now, just a quick look at this right here. This is the leg down. This was the leg up. This is the leg down. It gave you a long trade from right here. It gave you a chance to get your stop to break even. But what you're really expecting here is this leg down, right? This is a counter trend. That's giving you a leg, an opportunity to take a little profit on the move up. But what you really expect right here is this leg down, okay? Now, with all the opportunities that are being given by the divergence trades, the trend trades and the counter trend trades, I don't want you to lose sight of what markets are supposed to be doing here. Okay, leg up, leg down, leg up. So what it should do right now, leg down, right? Leg down from here. So this trade here, though it got you to break even, got you a little bit of profit. If you had 10 contracts on, it's $500 right there, $500-600 if you had 10 contracts on. All right, so it's a good trade to take anyway. But once it turns down, if this bar closes up, that'd be great. It's going to take 2 bars to get this up into the overbought probably. But if it does do that, then you'll have a bigger chance. I mean, a longer opportunity on the way down. Well, not a longer, but a larger duration trade when it starts going back in this direction is what I'm suggesting here. You can see that we're above the YBR. So you would be thinking this is an aggressive long trade here, go here, or if you wait till it comes out of the oversold, then would be just a conservative long trade, taking that type of trade. But but the aggressive long trade would be right here, and it's already happened. The way that the markets are right now, it hasn't flipped to a downtrend yet, but if it does do this, it's going to flip to a downtrend. So just telling you, the markets are always working the same way. All right, we're able to get in there and take like surgical pieces out of the middle of it all. And again, what these numbers are here, what these numbers represent is a trade setup that is from the TV trades range trigger, but it's not the divergence trade that we're looking at. A lot of times they overlap, so you'll be able to see in there what they are. And you can actually see in a glance, you can see how much follow through you have in the individual trigger bars. If you have these big numbers, like this is a 19 range, and on the Russell on a 19 range, or on any market on a 19 range, it has to go 10 ticks into profit to get your stop to break even. So you can see in here that a lot of these are going 10 ticks into profit. Now, because it has a smaller number, doesn't necessarily mean it's a stop out, though in this case right here it would be, and in this case right here it would be. In this case right here it wouldn't be. All right. But if you have the larger numbers, then that means the trigger bar is actually moving just about to to your goal for the day. And this is the Russell. On the Russell, we only had the one trade right here for 10 ticks this morning. It really didn't give up a lot of opportunity today. You can see right down here, there was one right here that went, it looks like it went enough into profit to get the stop to break even, and then one right here. And that was a nice trade, and then another one right here that was a decent trade, went at least 16 ticks. Looks like it went about 30. And it's just about to give another one right here. All right, and that is the Russell today. The ES, we had a bunch of trades on the ES today, and we had a bunch of trades on the NQ. So let's get into the ES one right here to start with. Okay. On the ES, you can see all these little arrows here. You know, those with the ES on a 7 range, it's only got to go 4 ticks to get your stop to break even. All right. So even this one right here that has a 0, that didn't stop you out. That is a Dragonfly Doji, which means it went down 7 ticks from the open, and then it went all the way back up 7 ticks. But the very next bar is what would have given you the goal for the day. But anyway, in here, the first trade we took on the ES is where we got our goal for the day. We got 10 ticks there, then we had 2 there to get us 10, then we had 4 there to get us to 14, and then we stopped out and went down to 4. And then we had a break even over here. We missed a couple of trades right in there. Both of those would have been good winning trades. Over here, we went from 4 to 8, so we got an 8 tick profit on that one. And again, we had a break even and a missed trade, and we stopped out on this one. That one never went 4 ticks into profit, so it was a valid stop out. That put us back down to -2 at that point. And then we had a +5 right there that got us to 3, it looks like. Yeah, it got us to 3. And then we had one right here that I missed. I didn't keep track of. And then we had the stop out right here that put us back down to -7. That's where I recorded it, -7. I missed this one, whatever that one was. I missed that one. We had a break even back here. During the break, you can see there was one trade here that, well, this bar only went 2 ticks into profit, but the next one didn't really do much more, so that would have stopped you out. This one right here, this bar only went 3 ticks into profit, but the next one went a little further, and that wasn't actually a trade because it wasn't alone down there. This one right here went 3 ticks into profit, and that would have eventually given you some good profit. All right. And over here where it is right now, this right here where it is right now could be a long opportunity from right where it is, as a matter of fact. Let me see if we can put that on. The gold trade from the very beginning is starting to work. I'm going to break even on that. Okay, I stopped paying attention to it. That was gold trade from back here. I should have had much more profit in that than I did. But now I'm actually going to lock in a little bit of profit on it. 2 ticks. And now the NQ. We ended up on the ES. Sorry, on the ES, we ended up with -7 ticks. That was a negative today. There was something else in there that didn't actually put me at -7. It put me a little bit in that, but I didn't keep track of it well. So I went over something this morning. Let me see, I haven't looked at the question box yet. Okay. Paul. Okay. I went over something this morning about the different types of chop. And there are different types of chop, and some chop is good and some chop is not good. Okay. I don't think I've done this. I think I did it on the gold. So let me just finish talking about the NQ right here, and then we'll get into that. Okay, I can do something down here. These are not showing. I guess it's only doing it in 5-minute increments down there. That's weird. Anyway, on gold, this is not gold, on the NQ. Our first trade on the NQ that we actually took, we had a break even there, then we had a +4. Then we had another break even. And then we had a +8 to get us to 12, then a +4 to get us to 16, then a +16 to get us to 32, then a +40 something to get us to 83. 83, that doesn't seem right, but 83, and then we had something else to get us to 91, and then went from 91 to 139. We had a break even, then went from 139 to 143. And that was it right there. That was the high of the day. Oh no, we had another one right there. All right, well, I didn't add that one in, whatever that was. But right here, I guess we're at 143, and then I started with a couple of stop outs, 3 in a row. I forgot to add that in, whatever that was. But right here, we stopped out, brought us down to 107. Then we stopped out again, brought us down to 71. Then this stop out here was my mistake, but we stopped out again, brought us down to 34. And then at the very end of the session, or near the end of the session, we had this trade right here. There was a 48 tick win, got us back up to 82 on the NQ. But yeah, the different types of chop. Let me finish going through this. All right, during the break, the trades that triggered using the other trade setup, there was one there good for 21 there, minimum 20, minimum of 18, minimum of 13, minimum of 7. This would have stopped out. 29, 14, all those would have been good trades. The ones that actually triggered using the divergence, there was one right here. The one stop out was right there. That one right there would have been a good trade. This one right here would have been a good trade. This one right here would have been really close to stopping out to the tick. I think it would have eventually stopped out right over here. And while it was running to stop out, if it would have stopped out here, he would have gotten it back on this move right here, and then this move right here for the short. That was the NQ. All right, it's a lot of words. All right, so I was just realizing the ES. What are we looking at? We're looking at a long trade here a little while ago on the ES from right in here. We're looking at a long trade. I am still in that. It's right here, I believe. That's a long trade, or was it a short trade that I was in? I'm somehow in an ES trade right there. And I don't know if I messed that up or not. And the gold trade we just got out with a couple of ticks. All right, so let's look at the gold trade and see how this developed. Okay, just for a second here. Now, if it were going to continue the trend on the way down, this is what it should have done. But what I was suggesting about the trend trade, you're above the YBR, so you would have been looking for an opportunity to go long when it came out of the oversold. The aggressive move is what I did when it went into the oversold. But the conservative move would have been taking the trade right here on the up close after it came out of the oversold. Okay, and so now it's pulling back again, and when it paints this bar, you're going to be in the oversold again. Now, if you're doing the trend trade, then you don't use that, right? You're just taking the trades that either go into the oversold or come out of the oversold when you're above the YBR, depending how aggressive you want to be. If you're going to be aggressive, you're going to take them when they're going into the oversold, buying the open of the next bar. When they go into the oversold, buying the open of the next bar. When they go into the oversold, buying the open of the next bar. I wouldn't, if you're going to do this, you got to only take it if it goes all the way up. If it's coming from overbought. If it's coming from oversold and it goes up and down like that, don't take it. So that right there, I wouldn't do. But this right here, where it's coming from the overbought down to the oversold, you can be aggressive and take that right there. This one right here, where it's coming from the top, going down to the bottom, you can be aggressive and take it right there. This one right here, it's coming from up here, but it didn't make it all the way up into the overbought. So this is questionable, right? This is questionable. Same thing with this one right here. This one is obviously coming from the overbought. So you could take this on the up close, or you could be aggressive and take it right here at the open. Right? The conservative way is to wait for the up close to pull out of the oversold. You guys get that? I know there's a lot of words, but I just want to make sure you guys are seeing this, seeing the way to take advantage of all this information that's right in front of you. Okay, so let me go back to the chop thing that I started to talk about. I think I drew it over here on the gold one earlier. Okay, I think I wanted to come back here, and I drew it where there was a clear spot. It wasn't really a clear spot, but I made my own. All right, well, I guess I can do it again. It takes a minute. Oh, here it was right here. Okay, yeah, there's 3 different types of chop, right? And the reason I do it is because we were in this. This is called a bugle. You see, it looks like a bugle. We have higher highs and lower lows at the same time. That's the worst kind of chop. All right, the best kind of chop is when it's range bound like that. That's the best kind of chop. And the next best is when you're in a triangle, because you can see as the range of the chop is getting narrower and narrower, you expect less and less out of the trade. All right. Now, the reason this is the channel chop like this, I should probably start by saying the divergence trades that we're doing in here, where you have the slingshot on there with the trigger, they work great in chop. They work better in chop than anywhere else. So you should identify the chop, right? You should be able to look at the chop and say, okay, this is the kind of chop you want to take part in. You really want to focus on it right here when you're in range bound chop. And that's not hard to see. And this kind of chop right here is probably the hardest to actually see when it's happening, because you don't really notice it that well. But the problem with this kind of chop is you're going to get, a couple of trades in one leg and then end up stopping out before it switches directions. Then you might get a few trades in that direction. You feel like you're in a trend, and then you stop out. And it leads to more stop outs than this type does. This will have more profitable trades and break-even trades. And this right here, the range gets smaller and smaller with this. This is triangle chop, right? This is bugle chop, and this is channel chop. Hey, I may have just coined all those terms. Anyway, the advantage to this is you can see where it should go to on every trade. And with the divergence trades, you're getting in at the top and you're getting in at the bottom, you're getting in at the top and you're getting in at the bottom. And so you can see what to expect out of every one. With the triangle chop, you can also see what to expect out of it because you got the prior swing highs and lows, but you can draw your own trend line and see where it should go down to, when it should go down, where it should find some support, and where it should find resistance. So you can kind of get an idea of what to expect out of the trade. This guy right here, this leaves a lot of ambiguity, okay? Because you can get into a trade like this one and you're thinking, okay, well, this is where the support is down here. You're gonna be thinking it's gonna go all the way down there, but it's not gonna, because it's got such a long leg, it'll stop and then it'll go back up. And it might give you a trade right here on the long side that may or may not do anything. It might stop you out. Then it's gonna focus going back down to the short side here. That's why I drew a couple of these in, one there, one there, and one there. And then you get down to the bottom, and this is where you stop out because it doesn't go anywhere. And then you got to switch directions. All right, so this is probably the worst kind of chop, the bugle chop. And let me see if I started talking about that because it was actually doing that at some point right here. It was actually doing that right here. Let me draw it for you. Okay. Right here we had higher highs and we had lower lows. Okay, so these are the long leg lengths inside it, right in here. And you see the numbers here from the trades that triggered using the other type of setup. They're on a 9 range. A 9 is good, a 7 is good, but a 2 is pretty small. And a 4 is pretty small. You need to go 5 ticks into profit to get your stop to break even, right? So in here, it's going to be a little harder to take the divergence trades for profit, right? Once it gets out of that, and it's really going to break out of it, like right here, just extended it down, didn't really get out of it. There was one trade right here that would have worked out okay. One trade right in here that would have worked out okay, and one trade right in here that would have worked out okay. But in here is sometimes, because the long legs, it ends up not giving you trades because it's like, it looks like it's in a trend right there, and the divergence trades don't work well in trends. So it looks like it's in a trend and you feel like you're going to be in a trend. And when you get in trends is when you get the flat spots. But then it just flipped out of the trend. And so that's the hardest thing to trade. I just want to point that out to you guys. I don't know if you ever notice that when you're actually trading. But I know, most people are not as focused. Unless trading is all they do, they're not as focused on everything that's going on with the markets as I am. If you have like another job and you have your charts running off on the side somewhere, you may not notice the little nuances of the markets like that, but I just want to point that out. All right, so do we have any trades? Nothing here, nothing here, nothing here, nothing here. It's 120. I talked through that whole thing. Wow. All right. Steven, are you in here? Steven is not in here. Does everybody understand what I was talking about with all that stuff? And the things that are triggering these, I'll give you a little sneak look at it. It doesn't have a slingshot. Just go in here and you turn that guy on. That's what's doing it. Okay. When the white goes through the middle into the overbought, the white goes through the middle into the oversold. That's what's doing it. All right, it's a new feature, but it's not divergence only feature. Okay, so using the divergence trades, I mean, we have some great trades today with the divergence trade setups. I missed a whole bunch of them. I missed a bunch of them today. But I was a little distracted, starting from the very beginning, where the password was wrong this morning. I don't realize that until I've opened the room up. And some people have realized that they just go and try people that have been with us for a while, they realize just go and try last week's password. So then I got to kick them out and then let them know that the new password is going to be what the password is supposed to be. And then I go redo it and open it back up again. It's kind of a pain in the neck, but it happens. Not that often. Not often enough to be a problem. All right. So all we're looking for here is an up close on the gold. We'll get this into the overbought by itself. Now we're below the YBR. So there's two ways to approach that, right? Two ways to approach it. If it does go up there by itself, you can still open to the next bar. Or if you want to switch into trend mode, because are we in a trend? Not really, but we do have lower highs and a little bit lower lows. So the kind of chop we're in right now, it was kind of a channel, right? Let's draw it. I use this so it draws a nice straight line. All right, that's your lower highs right there. And that's your lower lows right there. So it is kind of a nice channel, right? But you want to have a deep pullback into the channel. And then when you get into it right here, you want to take a short, right? And where should the short go? It should go down to here. Okay, you see, this is just a slow grind down. That's what people used to call it. Well, Mike Reed is the one who used to say that. He used to say violently sideways too. Violently sideways is a great thing now. See, he would never trade in the chop. But the violently sideways stuff is a good thing right now. And so what we need right here is just for this to close up. And when it does close up, it'll be roughly a 50% retracement of this bar right here, right? Not that bar, but that move, this move down. 50% is right here. So it'll be roughly a 50% retracement of that guy right there. And then a push down from there is what you'd be looking for. Right. So I don't want you guys to lose sight of that. I mean, we have all the trades that are triggering down here, but the way that the market works is always going to be the way that the market works. That's not going to change. We have different entry points now, better, more frequent entry points, but look right to the tick. Better, more frequent entry points. But all the other stuff is still the same. So what should it do? This leg down, right? That's what it should do. You guys all see that, right? In real time, right here, it should do that leg down. So here's the short. It's not that hard to see. You take that one with confidence. I'm going to take them all with confidence, but you can take that one with confidence, and that you'll at least get the stop to break even. You should at least get the stop to break even. Now, the exact entry point should have been here at 94.99. I am way off the exact entry. The exact entry point should have been up here. Actually, that's 49.5. I'm sorry. Why did I say that? 9. Right, 49.5. All right, so I'm not that far off. I'm off a little bit. But if I got in at the right spot, at the 9.5, then my stop would have gone to break even already because it went 8 ticks into profit. But I'm off it by 3 ticks. So I got a little slippage, and we'll see where it goes. Okay. Now, if I'd have gotten in at the right spot, my stop would have gone to break even. But let's put it there, and we'll slide it. Oops, that's the wrong thing. I can go back up here and choose this. Okay, and we'll put that over here and see if we have any other trades coming up. Slide that over there so we can watch it. Okay, nothing here, nothing here. We almost have a trade here on the Russell. Almost. Okay, so where should this go? It should go down here to 47.4, all the way down here. That's where that should go. So if I drag this up, we'll take one less tick than that, is what it should do. Okay. Pretty good and easy stuff to see, to do. It's never been easier. all the years, all the things we've done and built and created. Here it is, up to break even. Now I'm off by a couple ticks, so I'm just going to go to +1 on this because I'm off by a couple of ticks. But you see what this should do, right? I drew it all for you. At a minimum, it should get down here to the channel bottom, but the whole length should be like that big. It should get down to here, 46.4. All right. And I'm getting out right there. That was 11 ticks it just got me out of, but that was $1,100 for me with 10 contracts on. That's $1,100. And look, bam. Just like that. Over and over and over and over and over again. It's doing the same thing. All right, it is 1:27. So Dwayne, if we can cut that out of the YouTube, that'd be a pretty good thing to stick in Twitter, I would think. I don't know if you can do that, but anyway, over here on the NQ, we almost have a trade here. We almost have a long trade here. We almost have a short trade here on this. Yeah. I know you can shave down the whole thing, but that would cut the whole session, like all of your stuff out and all of the rest of my stuff out too. Everything else that we've done, you take it all. I don't know if you can't make a copy of it. If you can make a copy of it and then manipulate the copy, that would be something. I don't know. It'd take a lot of work, no matter what it is. Probably. I don't know. But anyway, it is 1:28, guys. Almost 1:29. I don't know that we're going to get another trade set up. We need an up close on this to get a trade set up, and this kind of went sideways on us. So we didn't end up with a trade here. Yes, the black and the blue went up together, so we don't have anything there. And see, right down to the bottom of the channel. And now it's pulling back. So what should it do right now? Right, we don't have a trade setup for it. We did have a trade setup here. This move up. The trade setup there would have been the open of this bar is what you would have been buying for this move up. But this move up should stop right about where it is, and it should make another leg down. That's what it should do. And this is all crooked. I'm sorry I made that all crooked, but that's what it should do. On the Russell right now, we want this to close up. All right, so it's going back up to the 50% retracement level again. And it did make a lower swing, so this continued the trend down. So this is what it should go down to now. Okay. It continues your channel. And that's it, guys. We ran out of time. All right, so if you have not taken a free trial with us and you want to, go here to mytradingiq.com. Click on the purple button right here. There's no credit card required for the trial. Click on that purple button. And you'll be sent to this page where all we ask for is your name, your email, your phone number. Just fill out the form. All right, make sure you give us a TradingView login ID. If you don't have one, go get one. All right, if you don't know how to get one, go here to mytradingiq.com. Click on trading platforms and follow the instructions right here. Follow those instructions. Okay, it's as simple as that. Do that stuff, and we will get you all the information that you need to get into the room in the morning and get started with your trial. All right? Yes, just give a long trade, right? And that's it, guys. With that, I can pass it back out to fabulous Phoenix, Arizona, and Studio A, overlooking South Mountain, America's largest city park. Dwayne is ready.
Yes, sir. Recap of the morning session.
Today it took 5 minutes and one trade to get to $1,000 with 10 contracts.
Good job.
Thank you.
All right, guys. The only market we didn't look at yet was silver, which is having a pretty nice day. Remember, when silver moves $1 in price, that's worth $5,000 per contract traded. So we opened right here last night. Came down to the zone. We spiked the zone. Now, even this little candle here, it opened at 73 and dropped to 67. At 6 pennies. You only need 2 pennies to get your goal for the day. But the market did find support right here. That got us back above the BBC. Red and falling turned to blue and climbing. So you had a leg and a retracement, a leg and a retracement, a leg and a retracement, a leg and a retracement. And notice that every one of those pullbacks held. The pullback holds more often than not, whether it's pulling from above or pulling from below. And so we got real close to the long target, and then we got one more retracement back to the BBC. And then we've now been consolidating for hours at the zone. Now again, the zones came out this morning at 6:15 a.m. Eastern. We've published the zones every week for our members for the last 15 years as of December. Now we're closing in on 16 years, the way time flies. Next December will be here before you know it. But when price rises to a weekly zone, we expect resistance till proven otherwise. When price drops to a zone, we expect support until proven otherwise. And again, one of 3 things happens: consolidation, rejection, or the slice. See how this candle sliced through the zone like it wasn't even there? When it ran out of steam, it retraced back to the zone it sliced through and continued in the direction of the slice. One last look at the daily chart. Well, we got a lower low going, so we're coming into this first area, 61.24, 70, let's call it 61.25, potential support. Then blue and climbing's potential support, top of the trend line's potential support, and then the daily BBC potential support. Overhead resistance, today's high is 61.57.75. This high is 47.75. This high is 62.25. So we got to take out that high before we can go up here and get into this area and then challenge the all-time historic high. Make sure you learn to use multiple time frames. Once you learn to use multiple time frames, you'll start to think in multiple time frames. To become a member, send an email to support@cfrn.net. In the subject line, just put, "I want to become a member." In the body of the email, put your name, put your phone number. We'll send you an email that explains everything it means to become a passport holder. And there'll be a link you can click if you want to become a passport holder. For starters, you'll get 2 hours of live training every trading day in our live training room. It's an interactive environment. Live trades in real time while you trade along and ask every question that pops into your head. 2 hours every trading day. On top of that, private one-on-one mentoring, no extra charge. The strategy you learn, the indicators you own as a passport holder are fluid across all markets, all time frames. Futures, stocks, crypto, Forex, ETF. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. Never-ending cycle. As a passport holder, you'll get the Logic 247 alerts round the clock. The concierge trade alerts, the second they're published each evening. Monday morning, When it's not a holiday, you'll get the weekly trading zones at 6:15 a.m. Eastern, and you're able to attend the members only workshop every Thursday night, 8 p.m. Eastern. Everything a trader needs, all under one roof, one low price. You also get the golden key that opens all the private channels in Telegram. We have private channels, public channels, but once you become a passport holder, you have access to all of them. So let's wrap today up with our good word for the day. Friday we talked about giving your worries to God. Today, heed your own advice. Proverbs 5:1. My son, pay attention to my wisdom. Solomon told his son, pay attention to my wisdom. The lips of an immoral woman are as sweet as honey, and her mouth is smoother than oil. But in the end, she is as bitter as poison, as dangerous as a double-edged sword. Stay away from her. Don't go near the door of her house. If you do, you will lose your honor and will lose to merciless people all you have achieved. Strangers will consume your wealth, and someone else will enjoy the fruit of your labor. You will say, if only I had not ignored all the warnings. Now I must face public disgrace. That's Proverbs 5:1, 3 through 4, 8 through 10, 12, and 14. Just read all of Proverbs 5. It's always easier to dispense good advice than to follow it. Solomon's life proves it. He tells us repeatedly and with great conviction that only fools fall into adultery. Yet he failed to heed his own advice and God's explicit warning about taking too many wives, or his heart will be led astray. Deuteronomy 17:17. Solomon married 700 women. And what was the result? His wives turned his heart after other gods, and his heart was not loyal to the Lord. 1 Kings 11:4. Here's an interesting question. Was the reason Solomon had so much to say about this particular subject because it represented an area of struggle and vulnerability in his own life? Sometimes leaders do that. They speak out against areas of weakness they see in their own lives. When you go to church on Sunday, chances are, whatever that pastor's preaching is something he's dealing with in his own life. One thing is certain. If Solomon had taken the advice he gave his son, his life story would have been very different. So the word for today, the good word for today, heed your own advice. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.